of this strategy, and here we'll be talking about you outlining what you see after you've been able to recognize those patterns, the price formations and all that have been taught. The next step is to outline it, draw them and all. So after that, the sub of this topic is forecasting. Yes, because outlining what when you're able to outline what you see in the market, then you can be able to forecast what's the next direction price is heading to. So let's quickly move over to the chart so we can move to the H4 time frame, because we have done the daily, the overall channeling and all, and now we are moving over to our least time frame, which is H4. Now this is our main time frame for this trading approach. Reason because it has good structures. Now let's go over to the Diane H4 time frame. Here we are guys. What next after opening your H4 time frame? You'll now have to indicate the patterns, the channel and any other significant formations you observe. Indicate the channel, the patterns. We have talked so much about this, and okay, I opened the charts down to H4, our smallest time frame. These are for intraday traders, and you are to spot the patterns and channel. Currently the price is bearish. It's so bearish. So like we said earlier, we saw this pattern. We are outlining every single thing we see. We saw this pattern. Okay, now here there's currently no pattern for this, but we can check out the previous pattern which we already outlined, the bear flag that occurred here and all. So the most recent pattern was this that caused this bear that just occurred now. Well, if you look more in depth, you'll see that there was also a bearish pattern here. This bear trade that occurred. And currently here at this point, there is actually no pattern in here. Currently there's actually no pattern, even though there was a pattern here which was a channel, but let's clone here. When price pumped, sold, and then pumped to this point, that was a buy that if we were to take, we could have taken a little quick buy on this H4 time frame. Now let's quickly move over to the next thing. After indicating these patterns, channels and any other significant formation, like probably like the candlestick. Now candlesticks do not work alone. It serves as extra confirmation. Now let me show you a bit of extra confirmation that occurred on this H4 time frame. You would see that price already gave a double top here. Price was here, second touch, double top, and then it gave this candle. This was a doji, and then if you check other patterns, you see price giving candlestick patterns, signaling that your analysis is right or wrong. That is it for you. So let's move over to the next stuff after indicating this pattern and channels. The next is forecasting the direction upon confirmation of the structure. Now once you have confirmed the structure, you have confirmed everything, you can now forecast What direction is this pattern or channel or the current market structure? What direction is it? Do you think it's about to move? What direction is the market moving to? You're now going to forecast it on the chart. Now let's say you saw this trade here, you did your double top, you cloned it here. After doing this double top, you created a candlestick. You can take this sell trade and forecast your sell. You forecast your sell with your stop loss last high plus few points, 20 points, and your take profit just at the touch of the trend line. Okay, now you can forecast your trade for a sell. Simply draw your line going downward. You forecast your trade for a sell. Here you forecast your trade for a sell. That is it. You show your bias of where you think, of where you see the market heading to. You trade what the market is doing. Now after then, you execute the order you set and forget. Now do not hold back in executing your orders, because either your trade is a win or your trade is a loss. You're going to learn something from it. But focusing on your winning trade makes you more consistent, and focusing on your losses, when you focus on your losses, you may have some setbacks emotionally, which is not what any trader should face. So when you focus on your wins, you should focus on your wins to gain consistency. And then you should not focus on your losses, but you should learn lessons from your losses. Okay, now when you execute your orders, it is advisable to set and forget, which is what I mean by set and forget. After placing this trade here, you place your sell trade here. Set and forget. Do not intervene in what you see. Do not intervene. Set and forget. That's why you need to do your analysis properly, so as you can hold this straight. You can hold this straight to target. Now let me show you something on this time frame. Here, for this sell trade, you'll see something. Let's say you're closing your trades halfway out of here or something, and you do not set and forget. Now here, watch this. Price moved up, dumped, moved up, and then you took this trade, and then you probably closed it around here after this big move, and because price went up, you exited your trade out of fear that price is about to move. But well, it wasn't. It was just a week of the H4 time frame. And guess what? Price dumped and hit the take profit. So if you had panicked from this week, you could have gotten out on a lower reward, which is not good for your trading, because when the real losses occur, you would question yourself. You'd question your profitability, whereas just because you didn't hold the winning trades can affect your overall profitability. So you need to hold your trades, set and forget. I think that would be all for now, as this is a practical aspect of this trading approach. All you need to do is practice, outline what you see, every single thing you see, respect what the market is doing, respect what you see, outline it, trade it, execute, set and forget, forecast and all, and you'll make good profits. So thank you very much, and that will be all for now. I'll see you in the next model of this trading technique.